if you sum things up, multifamily, that's what we're doing in construction right now in the province of Quebec. We're building those assets, or we're going to be building them between now and 2026. But there's a demand also for single house dwellings. Hi, this is Thierry Samlal from PMML. Today I want to present you market statistics for the multifamily market in the province of Quebec for the month of September 2023. So we're in the fourth quarter of the year. We've had in the first 3 quarters, many transactions of concrete assets across the province. At the beginning of the year, we had some institutional buyers, and most of the market this year was sustained by private buyers, including private companies that have been purchasing the concrete assets. For the month of September, we don't have that many concrete assets sold on the market, though we have some assets which are under accepted offers, but none have been transacted or are important enough to talk about today during this presentation. So the interest rates have gone up this month. The CMBs have gone up also of 0.4%, which is a large spread if you're considering that the interest rates were already very, very high this month. So for example, if we're looking at financing of $7 million and more, at the beginning of the month, we were at 4.61 of average interest rates, and we went up to 5.01. So that's a 0.4 spread, which is heavy in the context where, usually when you're buying multifamily property, you're looking for some kind of a return, and usually the minimum return that you're looking for is about 0.5% spread between the interest rate and the cap rate paid. What we're seeing this month is we're seeing transactions going for a price per door, which seems to be adjusted, although we don't have that much examples of larger scale properties sold with, a good cap rate, but we do have some example of cap rates I want to talk about. So technically, we're supposed to be seeing properties sold at, say, with a 0.5 spread on 5%. So we're supposed to be seeing properties sold for 5.5 of cap. We're not seeing that on the market right now, although there's some accepted offers on larger assets, and we'll see where those accepted offers are going to pan out once the financing is going to be obtained and once we're going to notarize those properties and close them. So let's go see my top 5. I want to talk to you about a 123 unit that was sold on the Pierrefonds side, which is on the West Island of Montreal. The West Island is popular. First of all, it's an English-speaking sector. There's a lot of housing. There's a REM development that's taking place on the Highway 20, and there's also a train station in Pierrefonds, and that's what's bringing in most of the business as far as multifamily right now. Why? Because it's easy transit to Montreal, and the REM, although is very south of Pierrefonds, is still very accessible and permits to go into downtown Montreal very, very rapidly. There's also the development of the Royal Mount, which has a lot of influence. Royal Mount is a commercial district, a very large commercial district at the corner of Descaries and Highway 40 that's being developed right now and built. And that has a large influence on what's going on the West Island of Montreal. A lot of industrial property being sold right now at high value, which is sustaining high value for rental value, meaning better businesses being implanted in that area, and also better businesses meaning better tenants that are available to live in that area and work in those businesses paying high rents. So it's an ecosystem happening right now in Pierrefonds, Roxborough. This 123 units went for $165,000 per door, which is a little lower than market, but still represents average market for that area. Now, what's interesting here is the cap rate is 4.3. So this property closed in the 20th of September at a cap rate of 4.3 in a context where the average interest rates for that type of product, although it's 123 units, you have several smaller buildings, the average interest rate is about 6%. So that's a gap, an important gap of about 1.7% negative return. Why did the buyer purchase this property? First of all, he paid, although he was paying 4.3 of cap rate, he was paying 13.9 of gross times the gross revenue. So meaning that the expense ratio here is about 40.5 on this asset, meaning that the buyer, the seller, but now the buyer is paying for hot water and heating in this asset. So being in 1978 to 1979 construction, there's a conversion possible. As you know, MLI Select is really fueling the market right now and permitting the buyers to buy these properties at very aggressive caps. And the idea here is to reposition the asset. So that's going to be done over time. And obviously, if the buyer is paying $165,000 per door, he's looking to optimize this asset and gain on value. What's interesting here, and this is a tilting factor in this transaction, is the buyer has a lot of experience. First of all, most of the market right now is sustained by private buyers. Institutional players are on the sidelines right now. They're not getting that much investors coming in to give them money to fuel asset purchases right now. So they're on the sideline, they're pens down. But the private buyers are present on the market and are very strong. So this one here, for this transaction, is on the market since at least 2018. And since that time, he has transacted more than 2,600 doors. So it's a person that's really active on the market. When you have an experienced buyer buying at this cap rate of 4.3, you know that there's a plan to optimize this asset over time. Pretty interesting transaction. Second transaction, a transaction that took place in Rosemont, a 67 unit, smaller units in this building, $149,000 per door, which is reasonable for the market, and a transaction that took place at $10 million. So the reason why this transaction was chosen is to show you the appetite of the market for larger property of 50 doors and above. Even for smaller units, we're going for $150,000 per door here. And this transaction took place at the very end of September, the 29th of September. So meaning that it probably started somewhere in June, July. Showing the appetite of private investors on the market for a transaction of $10 million. Let's go for a smaller transaction now in Rosemont, a 25 unit, still there with some smaller units in that asset, went for $132,000 per door at 15 times the gross revenue multiplication factor, but at a cap rate of 3.7. In a context where the interest rates for this type of asset is about 6%, that means that we have a negative return of about 2.3%. What's interesting to look at here is the expense ratio here is at 44.5, meaning that the rents are extremely low for the market and that probably a lot of OPEX are paid by the owner right now. So if that could be readjusted over time, there's a definite upscale possible on value here for a transaction that took place at $3.3 million. Let's go out of Montreal. There's less transactions that took place in this month of September. Typically, that's usually the case. We're probably going to be picking up in the rest of this quarter, but I want to show you a transaction that took place in Victoriaville. Victoriaville is in the center of Quebec region, close to Drummondville, so on the South Shore between Montreal and Quebec City. And it's an area picking up in value quite a bit. But for a purchaser that's looking for a more recent asset and that cannot find that asset in the larger areas, for example, in Montreal, Three Rivers, Gatineau, Sherbrooke, and even Quebec City, well, here we have a 24 unit, 2003 construction, for me, which is a young asset on the market, with only 20 years of wear and tear. So an asset of that type, of course, you have more recent electricity, more recent breaker boxes. Those assets are insulated. Usually after 20 years, you have to look at changing the roof. You have to look at optimizing and renovating the common areas. You have to look at changing the doors, patio doors, and windows on the asset. But still, this asset sold for $106,000 per door. at $2,550,000, which is interesting in a context where if you try to rebuild this type of asset in that area, you're going to be somewhere between $275,000 to $325,000 per door, and paying a high price. So in that case, you have a gap of almost $100,000 or $175,000, and you could just, renovate the existing assets. Even if you're putting in $100,000 per door in renovations, you're still buying way below market of a new building in that area. So if you're looking to purchase, I encourage you, and you're looking to purchase younger assets, but your cash down is a little, shrunk, and you can't buy in major urban areas of the province of Quebec, you can go in secondary areas and get buildings at a good price. And in those areas, of course, there's not that many new assets which are built and available. Most of those are going to be built and available in 2026. So you could definitely add value on rents in that 2-year period. Last of all, there's a lot of transactions and a lot of new builds taking place on the north end of Montreal. For those who know the Laurentide area going up, for those who ski, Saint-Adèle, which is north of Montreal, ski area, cottages in that area, but a clientele which is a little bit more select. So it resembles a lot Saint-Sauveur, which is a mountain there also where you could ski, but Saint-Sauveur, the pricing is a little higher. Here we have a property in Saint-Adèle, 1977 construction, 24 doors, so there's not that much multifamily sold in that area. And this one went for $128,000 per door in a transaction that took place in the 14th of September. So there's deals available at a good price per door. What we have to remember here is that the number of transactions have shrunk on the market. The buyers that are there right now and the sellers that are there, first of all, the sellers don't need to sell. So we don't have that urgency that everybody was waiting to hear about. There's going to be some transactions taking place. So people were expecting the market to shrink very, very fast. We're not seeing that yet, although the volume has shrunk. So it's going to be interesting to see what happens in the next few months. Now, there's some exceptions on the market, and there's one I want to talk to you about, which took place in downtown Montreal in the Ville-Marie-Est area on Baudry Street, so close to the metro station. Now, 1875 construction, so that's a more than 100 years old building. And this transaction for a 6-unit took place at $300,000 per door, which is an excessive amount for that area, but there's definitely possible development, and the rents could be very, very high close to downtown Montreal. So it's interesting to see assets being sold at this price. I want to finish this presentation by talking about land, because I have 6 transactions that took place this month, major transactions, pieces of land ranging, between 3 million square feet to 65,000 square feet. So these are big transactions, and we're seeing pieces of land going in the first outskirt of Montreal at $8 a square foot. And we're seeing also transactions taking place at $60 per square foot. So the difference is the development and the permits that have been given and that come with the transaction. So you could either buy pieces of land to develop industrial, you could buy pieces of land to develop multifamily, or you could buy pieces of land to be developed in those 2 categories, but with the permits and plans already prepared by the promoter selling the piece of land. And we're seeing these pieces of land being sold and transactions, ranging in the high price range here. And on those 6 assets that I'm looking at right now, 4 of those were bought by constructors, by builders, meaning that these builders are going to be developing these pieces of land in the next 2 years and delivering them probably with tenants in them to be able to get financing. So we're seeing these constructors willing to pick up and go back on the market. And what's interesting in these 6 transactions is there's 2 major transactions to build single house dwellings. And that market seems to be wanting to pick back up because there is a demand, although a lot of occupants are going towards tenantship. There's a large demand for ownership of single house family dwellings, and we need to build them. So, if you sum things up, multifamily, that's what we're doing in construction right now in the province of Quebec. We're building those assets, or we're going to be building them between now and 2026, but there's a demand also for single house dwellings. So I hope this information was useful for you. If ever you need any information in the market, I'm always available for you. Go see our pmml.ca website to look at all of the assets that we have for sale. I wish you a large success in all of your multifamily and real estate projects that you're going to have and you're putting in place. And we'll see you next month for our next presentation. Take care.